Merry Christmas and a Happy New Year. If you are a Mapletree North Asia Commercial Trust shareholder, confirm Merry Christmas because you see a share price skyrocket in the last few days, correct? On 31st of December, it is proposed that MNACT, Mapletree North Asia Commercial Trust, will be merged into MCT, Mapletree Commercial Trust, its sister company. What that means is A, you can actually sell in the open market, now at a 1-year high in terms of price, correct? Or B, you can actually consider one of the offers that they have given to you, which has an implied price of $1.19 for MNACT shares that can translate to MCT shares at $2. Later, I'll touch a bit more on the dynamic of this offer. They have actually two choices for you, so stay tuned to the end. But if you see the share price chart over here, you realize that the spike up has been for the last few days, correct? Ever since 21st December 2021, it was only $1.04. I took notice of this rapid share climb, and this is proof again that markets have years on the ground, you get what I'm saying? But nonetheless, today I'll be helping you understand this whole merger. Does it benefit you or not? Just in case you're a shareholder of either company. I'll also be sharing with you my thoughts, and last but not least, I'll give you the exact timelines on what to expect. So if this topic interests you, continue watching on. Hi guys, welcome back. Let's start with the quote by Ms. Sharon Lim, who is the CEO of Mapletree Commercial Trust's manager. She mentioned that the merger is a win-win for both MCT and MNACT. Unitholders for MCT will enjoy 8.9% increment in terms of the DPU and also 6.5% NAV increment. And why is this so? Maybe I can explain the DPU increment first. And that's because Mapletree North Asia Commercial Trust, MNACT, has a higher dividend yield currently. So when you merge them, MCT's yield naturally increases. Then the NAV increment, that's due to the fact that MNACT is now trading below book value. So when you acquire it, the NAV naturally looks better. And with that out of the way, let me share with you why this merger has actually happened. The first reason is that MNACT is already quite geared. If you see this graph over here, realize that they are at 42.2% in terms of gearing ratio, whereas MCT is only 33.7%. Although the max is 50% for REITs currently, previously it was only at 45%. So just in case the government reduces it back to 45%, MNACT is actually quite near the max limit already. So that means they can't actually acquire properties with debt. They probably need to do a rights to raise equity in. So that's why they are looking for a merger. On the other hand, for MCT, I've mentioned before on this channel that they have very little pipeline, or the things in the pipeline doesn't seem very interesting to me. Harbourfront Centre, St. James Power Station, PSA Vista and SPI development site. So with this acquisition, MCT uses up its gearing ratio and buys over its sister's assets, which includes mainly the Festival Walk based in Hong Kong. This is a big shopping mall there. The valuation of it is about $4.5 billion. The other assets are office towers in Shanghai, Beijing, Tokyo and Seoul. So this merger is a bit like when CapitaLand Malls merged with Capitalcom Trust. As a total entity, it's much more diversified and they have a lot more financial muscle. And not only that, MCT now will have a bigger mandate. And if you look over here in the mandate, they have expanded their geographical scope on where they can acquire assets. And that is using the MNACT's scope, which is Singapore, China, Hong Kong, Japan and South Korea. So the question, if you are a Mapletree Commercial Trust shareholder currently, is this acquisition good for you or not? If you see, MNACT is actually quite close to its all-time high, correct? It's not really distressed. But again, the book value for MNACT is only at 0.85 times at this current acquisition price. Close to median valuation. Probably even slightly undervalued. So depends on which angle you look at. But the unrefutable part is REITs are very likely still cheap. And also note that MNACT's problems in Hong Kong have long passed. They've gotten an insurance payout. The total settlement amount agreed was Hong Kong dollars 334.3 million. And this comprises of 84.3 million Hong Kong dollars for property damages and 250 million for revenue loss due to business interruption. So this whole settlement amount for the property damage is capital in nature and not distributable, but it's resolved. That's the main part. Festival Walk, which is their crown jewel in Hong Kong, has seen improvements in terms of footfall and retail sales. If you see this chart over here, you realize that Festival Walk Mall's footfall and retail sales have recovered quite well. It is 83% of July to September level of sales. However, market seems to be opening at less than $2 for Mapletree Commercial Trust. So I think market's not too excited about it, and I'm a bit puzzled why also. For me, I still see other benefits, and this is one of them. If you see the new management fee structure, you realize that previously MCT was based on the total assets in terms of how they charge their base fee and performance fee. However, with this entity, they've taken the mandate that MNACT has, which is a bit more shareholder friendly, which is 10% of distributable income and 25% of year-on-year growth of DPU. So growth must come in first, which is shareholder alignment. So all in all, I'm quite favorable for this merger. And if you agree, smash the like button. Or if you have questions on it, do leave them in the comment sections. Now let's move on to timelines that you should take note of if you are a shareholder. This is the chart that you should look at. You realize that there will be an EGM starting April, and they expect things to conclude by end of May, which means by June, MNACT would be fully absorbed into MCT. And in the EGM upcoming, you realize that you need to vote if you're an MNACT shareholder, whether you want 100% of shares, or you can take 84% of shares plus 16% in cash. Now, whether you choose option 1, which is a mixture of shares of MCT plus cash, or fully MCT shares, really depends on how you view MCT. Do you feel it is expensive or not? Because right now it's trading at a premium to NAV, even at $2. But having said that, I've also shared on this channel before that insiders for MCT have bought at $2.05, $2.08. So $2, even though it's above NAV, may still not be expensive. I'll give you a few more positive reasons. If you see the chart over here, you realize that you're selling the yellow line, which is Mapletree North Asia Commercial Trust, and you're actually buying the blue line, which has actually declined quite a bit, correct? So you may be selling high and buying low, depends on how you view things. Second point is that book value wise for Mapletree Commercial Trust MCT looks to be also suppressed. If you look in terms of this 3-year price to book value, you realize that it's trading close to its undervalued green line over there. And last but not least, the third part is that VivoCity has seen rental revisions upwards, and that amount is 3.5%. And that is surprising because we know that Sentosa is not fully open to tourists yet. But VivoCity has actually shown strong recovery in terms of sales. They have declared that for first half 2021-2022, it's recovered 75% of pre-COVID level sales. So that's something for you to consider. And again, if you have benefited, you like this kind of content, smash the subscribe. First, I'll be releasing a tutorial on the best 8 malls to own in Singapore. And in any case, if you want to learn more about investing, over here you see the end result of my research. But if you want to learn my research process, check out my investment course. All sales from this course will be donated via the Georgetown bursary. So if you're a shareholder of either of these companies and not sure about what the other side is, check out my previous tutorials. This is the latest one I have on MCT. It shows you some data points of VivoCity as well as the business parks. This one is on MNACT, whereby I've actually deep dive into Festival Walk Hong Kong Mall to see how recovery trends look like there and to also understand its office assets. So hopefully either of these videos can help you in your journey further, and I'll see you in the next one. Take care and goodbye.